U.S. markets are muted after the S&P 500 clawed its way back to positive territory for 2025 yesterday. My next guest sees bullish signals emerging from U.S. consumer sentiment data due on Friday. Let's hear from Jeff Weniger, head of equity strategy at WisdomTree Asset Management. Thanks for joining us today.
My pleasure.
So I know you have a table that shows all of the different changes in the tariff rate for China that the U.S. sort of whiplashed all over the place in the last couple of months. I'm wondering whether this 90-day truce, if you take it at face value, is it something investors feel comfortable now putting their money back into the market, seeing a 90-day truce, even though you have sort of that table up that shows everything going all over the place for so long?
Right, and 88 days remaining. Is it one of these things where you have almost like the U.S. debt ceiling where, okay, 88 days pass, but then as you get midway along, you have to start talking about it, and you end up rolling into Thanksgiving or Christmas still talking about this type of thing. I mean, that's a primary risk for stocks. I mean, if you look at the action of the last, what do you want to go with, like 90 days or so, you can almost plot the travails of the S&P 500 against the tariff rate on the Chinese by the United States. I mean, back on the original tariff dates, the original tariff declarations of the first few days of February, China had the 10% tariff, and then it was 30, and then it was 54. Let's try to remember this. And then it went up to 145. And then it was the Truth Social post down to 80. Remember when Scott B give us 80. And now as it stands today, it's 10 plus 20, 10 by the baseline, 20 for the fentanyl equals 30. And if you go back to April 8th through the 10th, when the number was 145%, as it's trickled down, I guess maybe trickle down might not be the most
the right word, yeah.
As it's come down, we've got this big furious rally, and now here you picked up about 1,000 points on the S&P 500 ever since then.
Yeah, it feels like people were just waiting to be optimistic again after being beaten down left, right, and center for the first part of the year. So they've kind of come back. Maybe they're putting some money back on the table, thinking at least in the 90 days, there's some calm here. But you don't know. We don't know if it'll hold. I'm wondering whether you and others are thinking there's going to be a 10% tariff, generally speaking, for those who are going to be tariffed at all, and everybody's moving forward on that assumption.
Well, I still think that there's some resolution left in this market into June and July, but it's whether or not any of that's going to come as a pleasant surprise, right? So you have the deal or the framework of the deal with the Brits, and then you have nice insinuations in Switzerland with the Chinese. What happens when trading block number 3 or nation number 3 comes with a deal, let's say today or tomorrow or the next day? Do people who are moving money see that as a surprise? I mean, it's like some country comes to the table, there's a deal, and that's the trend of things. And is the rally in the S&P from 4,900 up to 5,900, does that already account for it? You start to worry that could be the case. I mean, we are still steadfastly bullish on global equities, and a lot of it has to be when you were referencing my University of Michigan post and chart. University of Michigan sentiment survey it's below the basement, actually. Like, we go down, take the stairs down to the basement, and then dig even deeper. It's at 52.2. Street consensus is that it's going to come in like a point higher than that on the preliminary gauge, which is on Friday. So let's say it comes in at 53 or 54. When you look historically, you want to get long equities when this stuff is down in the basement, because there's a lot of pessimists out there. And even though we have rallied back and indexes like the S&P are ever so in the black year to date, there was still a big washout. I mean, the VIX hit 60 in recent memory, 35 days ago. And so usually when that happens, sometimes it sets you up for 12 or 24 months of decent action in the stock market.
Let's talk a little bit about inflation as well, because we got the April data out. A lot of people are saying, of course, the tariff situation has not really worked its way through, and that's to come. What's your bet on the Fed movement as a result of what we've seen so far?
Well, that report was a total gift. It's basically as good as it can get. You're getting that every report that I've been talking about. Owner's equivalent rent will ratchet up by a few ticks with each passing report as it plays catch up to the old home price appreciation. In the United States, we have kind of two countervailing forces. We have beef and poultry, and still to some extent the egg prices being elevated, but gasoline has been on the wane. In the United States, we do it by the gallon. You're about 40 cents cheaper, maybe call me 45 cents cheaper than this time last year. So a nice little gift in that report. But yeah, as you pointed out, that's an April data situation. The original announcements, which were small by order of magnitude, are in the first week of February. You still need to kind of capture this as it goes through into June and July, because a lot of people front ran it. Right? It's got to, let's call our supplier in China here in the month of January, here in the month of February, before this stuff hits, and let's take a purchase order. And then now June, July, August rolls around, you got to put in another purchase order, and the tariff is 30 or plus or minus from that. So we will see some of that follow through. But I do think we have some nice portents in the fact that we have a crude oil price that is abiding. I tend to fall in the disinflationary camp, much less so than the stagflationary camp. I think that should probably give us some nice action here from the Federal Reserve. And I think it's being corroborated by monetary stimulus from the Chinese. We had that nice announcement last week. It was moderately accommodated by the Chinese. And I also think the Bank of Japan needs to be on hold, not hike. And I think there's a lot of people out there that think they're going to hike this year.
Got it. Jeff Weniger, I've got to leave it there. Jeff is head of equity strategy at WisdomTree Asset Management. Thanks for that.